XRP holders, we need to talk because today is one of those days that has the entire crypto community asking questions. I've got some good news, some bad news, and honestly some news that has investors feeling a little uneasy. XRP is under pressure, the broader crypto market is bleeding, and many traders are wondering whether this is just another temporary shakeout or the beginning of something much bigger. The headlines coming out today have created a wave of uncertainty, and one confirmation in particular has everyone paying attention. Before we dive into everything, make sure you hit that like button and subscribe if you enjoy daily XRP coverage. You already know the tradition around here. Every time this community comes together and floods the video with support, it feels like the market eventually rewards our patience. Whether you believe that or not, one thing is certain. This community has been through plenty of volatility before, and today is another one of those moments where staying informed matters more than ever. So buckle up because there is a lot happening beneath the surface of today's price action. The first thing investors noticed today was the sharp decline across the crypto market. XRP was hit hard alongside nearly every major digital asset. Red candles dominated the charts, and traders who were expecting a calm session instead found themselves watching support levels get tested. It wasn't just XRP experiencing weakness. Bitcoin also pulled back significantly, Ethereum moved lower, and several major altcoins followed the same path. When everything starts falling together like this, it usually tells us that broader market forces are at work rather than a problem isolated to one asset. That's exactly why many XRP holders are trying to separate emotion from reality right now. While price declines can feel alarming in the moment, understanding what is causing the move is often more important than the move itself. The market has a way of creating fear when prices fall and excitement when prices rise, but experienced investors know that headlines, liquidity, and market structure often play a much larger role than daily price fluctuations. Today's sell-off certainly grabbed attention, but the bigger story is what may have triggered it and what it could mean moving forward. One of the most talked about developments today involves a major increase in liquidations across the crypto market. After a period where leverage had remained relatively stable, the market suddenly experienced a wave of forced selling. Billions of dollars in positions were wiped out as prices moved lower, and traders using excessive leverage found themselves caught on the wrong side of the move. This kind of event often creates a chain reaction. As prices fall, leveraged positions get liquidated, which pushes prices even lower and causes more liquidations. It becomes a self-feeding cycle that can temporarily exaggerate market weakness. For XRP holders, this is important because sometimes the price decline isn't necessarily tied to changes in the long-term fundamentals. Instead, it can be driven by short-term market mechanics. The liquidation wave we saw today appears to have amplified selling pressure across multiple assets, creating an environment where fear spreads rapidly. When traders see red across every chart, many react emotionally rather than logically. That reaction can create opportunities, but it can also increase volatility. The key question now is whether the worst of these liquidations is behind us, or whether additional pressure could emerge in the coming days. Despite the market turmoil, there was actually some encouraging news that many investors may have overlooked. One of the most significant developments involves progress surrounding crypto regulation and market structure legislation. The advancement of important legislation onto the Senate legislative calendar is a noteworthy step for the industry. While there is still a long process ahead before anything becomes law, the fact that discussions continue to move forward signals that policymakers are taking digital assets seriously. For years, uncertainty surrounding regulations has been one of the biggest obstacles facing crypto adoption. Investors, institutions, and companies all want clarity before committing significant resources to the space. The progress being made could eventually create a more predictable environment for innovation and investment. XRP supporters have long argued that regulatory clarity is essential for unlocking broader growth opportunities. While today's market reaction may not reflect it, developments like these often have a much larger impact over the long term than temporary price swings. Markets sometimes ignore positive news during periods of fear, but that doesn't mean the news loses its significance. In fact, some of the biggest opportunities emerge when strong fundamentals are overshadowed by short-term panic. Now let's talk about the confirmation that has many traders worried. One of the major stories circulating throughout the crypto market involves the movement of a large amount of Bitcoin associated with the long-running Mt. Gox situation. Whenever Mt. Gox enters the headlines, investors immediately start discussing potential selling pressure. The reason is simple. Market participants fear that Bitcoin being distributed to creditors could eventually find its way onto exchanges and be sold. Whether that selling actually occurs or not, the anticipation alone can influence market psychology. Traders often react before events happen rather than waiting for confirmation. That's exactly what may be occurring right now. The movement of funds has reignited concerns that additional Bitcoin could enter the market, increasing supply and potentially weighing on prices. For XRP holders, this matters because Bitcoin remains the dominant force in the crypto ecosystem. When Bitcoin experiences major volatility, the rest of the market often follows. Fear surrounding potential Mt. Gox-related selling pressure appears to have contributed to today's weakness, creating another layer of uncertainty during an already fragile market environment. Adding to the confusion is the fact that investors are trying to interpret multiple narratives at the same time. On one side, there are concerns surrounding large Bitcoin movements and liquidation events. On the other side, there are positive developments involving regulation, adoption, and institutional interest. Markets rarely move based on a single factor. Instead, they respond to a combination of news, sentiment, and technical conditions. That is why today's price action feels so difficult to understand. Some traders see opportunity while others see danger. Some view the current decline as a healthy correction, while others fear it could evolve into something more serious. The reality is that nobody knows exactly how things will play out over the next few days. What we do know is that volatility tends to increase when multiple narratives collide. Right now, that's exactly what we're witnessing. Investors are trying to determine which story matters most, and until a clear answer emerges, uncertainty will likely remain elevated throughout the crypto market. Another factor contributing to market discussions is the broader macroeconomic and geopolitical environment. Investors are constantly evaluating global developments and trying to determine how they might affect risk assets. Statements involving international negotiations, economic policy, and global stability often influence sentiment across financial markets. Interestingly, traditional equity markets have shown relative resilience despite some of the headlines dominating news coverage. Major stock indices have continued demonstrating strength even as crypto assets struggled. This divergence has led many analysts to conclude that today's crypto weakness may be driven more by crypto-specific issues than by broader market concerns. If that assessment proves correct, it could mean the current sell-off is more temporary than some investors fear. However, markets rarely offer certainty, and traders must remain prepared for multiple outcomes. What appears obvious today can change dramatically tomorrow. That's why maintaining perspective during periods of volatility is so important. One silver lining that deserves attention is the rapid growth of tokenization. This trend has quietly become one of the most exciting developments in the digital asset industry. Tokenized stocks and other real-world assets continue attracting significant interest as investors seek more efficient ways to access financial markets. Market capitalization within this sector has expanded dramatically, and trading activity continues reaching new highs. For XRP supporters, tokenization is particularly interesting because it aligns with many of the broader themes that Ripple has discussed over the years. The ability to move value efficiently across networks, reduce settlement friction, and improve financial infrastructure represents a massive opportunity. While XRP may not currently dominate the tokenization narrative, the growth of the sector demonstrates increasing acceptance of blockchain-based solutions. Every step toward mainstream adoption strengthens the overall digital asset ecosystem. Even during periods when prices struggle, developments like tokenization remind investors that innovation continues moving forward behind the scenes. At the same time, regulators appear to be paying closer attention to tokenized assets. Reports suggesting that frameworks are being developed for tokenized stock trading indicate that policymakers recognize the potential significance of this market. Regulatory engagement is often viewed as a double-edged sword within crypto. Some investors worry about restrictions, while others welcome clearer rules. In reality, long-term adoption likely requires a balance between innovation and oversight. Large institutions generally prefer operating within clearly defined regulatory environments. As frameworks evolve, more traditional financial players may feel comfortable participating in blockchain-based markets. That could create entirely new opportunities for companies operating within the digital asset sector. XRP holders frequently point to institutional adoption as one of the major catalysts that could drive future growth. While there are no guarantees, increasing regulatory engagement suggests the industry is becoming too important to ignore. Of course, none of this changes the fact that XRP's chart currently looks challenging. Technical indicators across the market have weakened as selling pressure intensified. Many short-term signals have shifted bearish, reflecting the momentum that emerged during today's decline. Technical analysis can provide useful insights, but it is important to remember that indicators reflect current conditions rather than predict the future with certainty. Markets often reverse when sentiment reaches extremes. Some of the strongest rallies in crypto history have emerged immediately after periods of intense fear. That doesn't mean a reversal is guaranteed, but it does highlight why investors should avoid making decisions based solely on emotions. When everyone feels confident, risks often increase. When everyone feels fearful, opportunities sometimes begin appearing. Understanding that dynamic can help investors maintain perspective during turbulent periods. A major question now revolves around support levels. Traders are closely monitoring key price zones to determine whether buyers are willing to step in. If support holds, confidence could gradually return and create the foundation for a recovery. If support fails, additional downside becomes possible. This uncertainty is exactly what makes current conditions so fascinating. Markets are essentially engaged in a battle between fear and conviction. Bears point to negative momentum and weakening technical indicators. Bulls point to regulatory progress, growing adoption, and long-term fundamentals. Both sides can make compelling arguments. Until the market chooses a direction, volatility is likely to remain elevated. That reality may be uncomfortable for some investors, but it is also a normal part of the crypto cycle. One thing worth remembering is that XRP has faced difficult moments before. Long-term holders have witnessed regulatory battles, market crashes, exchange delistings, and countless periods where sentiment appeared overwhelmingly negative. Yet despite those challenges, the asset continues attracting attention and maintaining a passionate community. History doesn't guarantee future results, but it does provide valuable context. Markets often test investor conviction during periods when confidence is weakest. Those moments can feel uncomfortable, but they are also part of the journey. Whether someone is bullish or bearish in the short term, understanding the broader picture is essential. Daily volatility may dominate headlines, but long-term trends often tell a different story. There is also the possibility that algorithmic trading systems are contributing to current market behavior. Modern financial markets rely heavily on automated strategies that react to price movements, volume changes, and technical signals. When multiple algorithms identify similar conditions, they can amplify trends in either direction. Some analysts believe this dynamic may be playing a role in today's sell-off. While it is difficult to measure precisely, automated trading certainly influences market behavior across crypto and traditional finance. Understanding this possibility helps explain why markets sometimes move more aggressively than expected. Price action is not always driven by human decision-making alone. Increasingly, it reflects interactions between sophisticated trading systems responding to rapidly changing data. As we look ahead, the next several days could prove extremely important. Traders will be watching Bitcoin closely for signs of stabilization or further weakness. They will also monitor developments surrounding regulatory progress, tokenization initiatives, and broader market sentiment. Any significant shift in one of these areas could influence XRP's trajectory. Markets often move quickly once uncertainty begins clearing. That's why staying informed remains critical. Rather than focusing exclusively on short-term price fluctuations, investors should pay attention to the underlying factors driving market behavior. Those factors often provide more valuable insights than the price chart alone. For investors wondering whether XRP could fall further, the honest answer is that nobody knows with certainty. Additional downside remains possible, just as a recovery remains possible. Markets are inherently unpredictable in the short term. What matters most is having a plan and understanding your own risk tolerance. Successful investing is rarely about predicting every move correctly. More often, it is about managing risk, staying disciplined, and avoiding emotional decisions. The current environment is challenging, but it is also creating opportunities for those willing to think beyond today's headlines. Whether this decline ultimately becomes a buying opportunity or a warning sign will only be clear in hindsight. So where does that leave XRP holders tonight? The market is nervous, fear levels are rising, and the confirmation surrounding major Bitcoin movements has added fresh uncertainty. At the same time, regulatory progress continues advancing, tokenization adoption is accelerating, and long-term industry development remains intact. That combination creates a fascinating but challenging landscape for investors. As always, the crypto market has a way of surprising everyone when confidence becomes too one-sided. For now, all eyes remain on XRP, Bitcoin, and the broader market as traders search for clues about what comes next.